Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back for another incredible episode of Bullish and Beyond. It is green today, whether you're in JT's Crypto Den or you're in the backyard of my Airbnb. You can see some of the greenery over here. I am very bullish on stocks, crypto, and life, and particularly life in Florida. Things are awesome down here. But the markets are roaring, hitting new highs, and crypto is moving into alt season on this 4-year cycle, which JT is going to dive into. So what do you think is going to drive this 4-year cycle? Anything different compared to 4 years ago, or kind of the same setup that we're seeing again?
Yeah. So first, everyone, ETH just hit a new all-time high, so that's huge. All of that it did. 49.51 was its newest all-time high. It would have happened. It would have been yesterday or something like that. Either way, so the things that you would think would be different 4 years apart are just not simply applied here. Like at this exact time in 2021, in October, if you go through the historical charts of Bitcoin and crypto and you look at September and October, September is 88% red and October is literally 90% green. Very rarely do we have a bad October. The only bad Octobers we have are exactly 4 years apart, and that is the bottom of the bear market. Super interesting. It's been true for five cycles.
And we only have 1 day left until October starts, so good thing I'm buying some more crypto today.
Yeah, we're already up. Now, I'm not some magician. It's not like some course of, God intervention. This is all macro driven around the short-term debt cycle. So the things we look for
And it
that
keeps
trigger an
cycling.
alt season, it does. It doesn't stop because we
It's
just keep
crazy.
doing the same things. We keep doing the same things.
As a mostly equity investor, it's hard to I ask my crypto friends like you, it's like, is it going to happen again? And everyone's like, yeah, it's setting up. So here you are to teach us about the setup.
Yeah. The first thing that we look for is for Ethereum to be outperforming Bitcoin. Like you need ETH, specifically ETH, because it's the number 2 asset, and it is the platform of the majority of DeFi stuff that we all know and love. Like they literally have 60-70% of most of the things you would think of. NFTs, liquidity.
You told us they have the most secure smart contracts. So if I'm developing a smart contract platform, it seems like a no-brainer.
Yeah, exactly. 100%. So
same
you
with
need
the government.
Ethereum outperforming Bitcoin. That's right. You need Bitcoin dominance to be going down. So that means, its market cap relative to every other coin needs to be actually going down. Happening. You also need a weak dollar, which basically has people looking for outsized returns because they now have a higher hurdle that they need to make. If you haven't paid attention, the dollars went from 130 to 98 in the past year and a half. You also basically
What do you mean by 130 to 98? What was that?
The DXY, the dollar index chart. So the DXY
got it. Compared to the rest of the world, is that what that's tracking?
There you go. Yeah.
Okay.
So we were 30% stronger than most currencies, and now we are 2% weaker than the other currencies. That's a good way to read that.
I mean, I cashed in some international bills yesterday that I had from my last Europe trip and trip to the Philippines, and I did not get as much money back as I would have thought. So there you go, weak dollar. I'm like, what happened to this exchange rate?
That's exactly what I'm talking about. The DXY is the chart you follow for that. Another thing we need is liquidity. So M2 needs to be going up, which it is. So, and then finally is going to be the social markers. For a while now, Coinbase has been in the top 5 of apps. Hood right behind it. They're
Oh yeah.
both in crypto. You also have people literally Googling crypto 10 times more than they were just a month ago. So retail needs to show up.
Wow.
That's right.
That's
All of the
insane.
It is. That's what happens. Like you need the retail phenomena. That's the last little bit. That's number five. Sorry, and
Is
then six.
retail
The last
too
thing I
late
forgot.
though? I always wonder. Like I remember the last cycle in
They're always too
2021.
late.
You know, I bought some Bitcoin. It was at a freaking high because everyone was talking about it. Then all of a sudden it crashes.
Yeah,
How
it's
so?
they're always too
How do
late.
you advise people then that are about to get in the crypto? Like is it still a good time? Should we get in for this cycle?
I can tell you what I'm personally doing. Right. I personally am putting money to the side instead of selling to avoid tax because I'm expecting this to come to an end abruptly and sooner than you would think. Back in 2021, September to March is all you got, and almost $1 trillion entered the market.
Wow.
And then from March until I think March of the following year, it didn't move. It was literally channel bound 21 to 15K the whole time. And
Wow.
then over the next 2.5 years, which is what we've existed in, this is the bull market. We've been here a long time. Literally 2.5 trillion have come back. So it's just kind of how it plays out. The next to the social markers, though, the last thing, number six that we look for are rate cuts, which just happened, and all six of those have to be true. They've always been
Okay.
true 5 times in a row. 5 times that's been true. Um, right around the same time, and it really all has to
So
do,
interesting.
yeah, with my personal beliefs. It all has to do with presidential elections. Bitcoin came
It makes
out,
sense for your cycle.
and the halvening is 4 years.
Yeah.
So
Yep.
like the halvening always coincides
Satoshi must have
within.
planned that.
I mean, if you were sitting there trying to design a system, that's supposed to be stable in times of instability, like you would want the halvening to time around,
Yeah.
the election cycle. And if you're considering America, if Satoshi was American, um,
And Trump says he's the
but
crypto president. So it makes me even more bullish on crypto during this cycle almost than any other time.
yeah, but here's the thing. In the alt season, you're going to hear this a lot. This cycle is different. This be my third one. I've heard it every time. This cycle
Okay.
is different. They have reasons. Oh, NFTs, Nike's building with them, like they're here to stay, and you know, people don't realize how fragile this
No
stuff
one is
is.
talking about NFTs anymore these days. I mean, I know you have one on your back wall back there, you know,
Right.
that glorious
Right.
ape that you got, but
That's right. You know what I mean? Like that's just how it is. And then before that, you know what it was? ICOs. This is the new
oh,
IPO.
yes.
They're going nowhere. This is the new IPO. Why would you ever want to do a traditional IPO? And it's like, well, your ICO is not registered with the DTCC, so like every share you own actually isn't. Oh, you don't actually own it in the eyes of the law. So it's like, what's the point of IPOing with an ICO? It's actually more
Okay.
problems. Like what happens is retail comes in late. They need to justify the prices they're buying at. Smart
Yep.
money's just making crazy money. Retail's exit liquidity. And eventually what happens is there's like a black swan event because leverage got too big, greed got too high, someone did something they shouldn't have done. People find out because it's a
That
public
happens.
ledger, and then basically you lose enough to hit that first tranche of margin, and then you hit the next one and the next one, and we call that a cascading leveraged event. When this occurred in 2021 in Q2, it was like right when Q2 started. You had Do Kwon. We were at 67K. It went down to 40 in a day. And then the following
Wow.
weeks, Sam Bankman Fried brought us back down to below 30, and we stayed there for more than a year.
Better have a
More than
stop
two,
limit
maybe a year and a
order in.
half. Yeah. It's just what inevitably happens is with all of those markers we talked about, with the rate cuts specifically, money gets loose. And they've signaled two
Yes.
more this year. So money's only going to get looser. People are only going to lower their credit requirements and all this stuff. So what happens is you start having unreasonable capital in unreasonable hands. And a lot of mistakes are made. Like there was billions in an algorithmic stablecoin because it paid 20% a year, and no one stopped to think, how are they paying you 20% a
How's
year?
that possible? Ponzi scheme.
No, no one even stopped and thought about that. I
If
mean,
it's
I
too good to
did.
be
I
true
maybe
in
put a
life, I mean,
dollar into
come
it.
on.
Yeah, there are people using it as a savings account.
Speaking of those rate cuts, I feel like there's a little bit of uncertainty right now. The government's potentially going to do a partial shutdown, tomorrow night at midnight if they don't have some agreement across the aisle. And right now, it's not
Hmm.
looking good. So they said they're going to stop reporting numbers like you know things about that we need to know. I can't believe they would just stop reporting, CPI and employment and stuff like that just because the government's doing a partial shutdown. Seems like there's a few things like that are like relevant to keep reporting, regardless. Kind of surprising, and then that makes the Fed's jobs harder. Not that they even care what the numbers are; they kind of just make up their own mind, anyways. It seems like, um, but they're using that data at least to tell us why they made those decisions. And
Yeah,
speaking of
yeah.
inflation, I watched a really interesting video last night from the president of BlackRock, and it was recorded the day of or the day before the rate cut. So, what was that, like 3 weeks ago or something?
Yeah.
And, he was saying that he actually saw less inflation than the government was reporting, and he was using all the companies they owned to approximate the inflation. And he's saying he's not guaranteeing this is the worldwide inflation. He's just sharing, they literally have trillions and trillions of dollars at work, so they have a very good idea what's happening in the market at all times. And their
Yeah.
companies he was showing, he only said it was about a 2.4% inflation compared to the government was showing 2.9. And one of the biggest differences that he could pinpoint was the rental increase. And he was saying that rental increase was driving so much inflation on the books for the government's number, but that they had, tens of thousands of units that were rented and they had a completely different number. So he couldn't agree with the number that the government was pointing out. And obviously the government's looking at a much bigger pie. But
Yeah.
BlackRock is probably second to the government in terms of total money at stake.
And there's some unpacking right there. So if rents are the thing that are changing these inflation numbers, it's really important to understand how rents go up. So there's never been a down year in rents, for those who do not know. They just go sideways. They stay the same, then they go up. The only time they, like, well, as a justification for them going up, the value of the homes have increased
Sure.
significantly. The owners of those homes are going to what? Refinance because they don't want to pay cap gains and they want to hold their long.
Yep.
Now they're refinancing at a higher interest rate on more money. That
So they
gets
have to
passed
raise
on to
the
the
rent to
consumer.
fund it. It makes sense.
And that is another example of how the consumer at the end of the day ends up paying for all of these behaviors, all of these, like, let's just print money out of thin air. Let's just do that. And then like 2 years
Unlimited.
later, this is what it looks like. And by the way, the amount of money that I bitched about at the beginning of this podcast when we started episode 1 has only increased by 5 something trillion in 36 episodes. Guys, it's an unreasonable amount of printing. We are going to see an
It's gonna
insane
keep going.
change. It's
What
going to
happens? What
keep
happens to the
going.
rents though when if the interest rate actually comes down and people are refinancing at lower rates? Maybe that'll bring rents down to a lower percentage year over year.
We will not be down, but they'll stay where they're at.
Not be down. I'm saying it'll be grow lower. Like
Yeah.
that, instead of raising the rates 5%, maybe they'll only raise them 2% or something.
Yeah, 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 exactly. Yes, that is what you could expect, a dampening of the ramp up or
Yeah.
stagnation across the board. but you're not going to see someone graciously say,
Yeah.
"Actually, I'll save you $100 a month."
I mean, it makes sense. I mean, money's worth less, and then literally your property, let's just say it goes up, 3 or 4% a year on average or something. You're going to have to raise your rents by that much just to keep things even, let alone actually make more money as an investor. So if you can't raise it enough, you're going to sell it and move on to the next.
Yeah, I mean, essentially, that's how all of that works. So, when you guys hear that from Larry Fink, like that's something to keep in mind. All of this is a byproduct of that money printing. It all can be traced
Yeah.
down. We're first principles thinkers here. Like it all comes down to M2, and that's up 5 trillion in less than a year. So
Well, if anyone wants to spend their cash to stay here, I'll drop a link to my Airbnb in the show notes.
there we go. Yeah, and it'll be more next year if we remember that lesson.
Oh, well. I
So
mean, I get
might as
more
well get
reviews.
it.
I'm gonna the
Yeah.
rates go up. By the way, the rates go up a lot when it gets cold in Florida, when it gets down to the 70s, here in December and January. So
Right.
that's when people actually pay money to come to Florida.
Yeah, that's when you can get the traveler rates as well. Supply and
Another
demand.
thing they were talking about at the conference. It wasn't Larry Fink, by the way. I'm blanking on the president's BlackRock's name right now, but that's who was doing the talking. He was saying the biggest driver in the market is AI, and I think you and I both would agree with that. And number one company in the world is Nvidia, the driver of AI,
That's right.
and they're building data centers like crazy. And these AI deals are happening at light speed. Just today, CoreWeave signed another deal. They had just signed a $6 billion deal. Last week we talked about it in the podcast. Today, this morning, they signed a $14 billion AI deal with Meta.
Let's go.
Unreal. These
That's
companies
huge.
cannot build fast enough. So CoreWeave is doing the building for them and using that money to buy future infrastructure. So they're just playing a little bit ahead of the game. They get more money.
Yeah.
They keep funding. It's all contractual. The one issue I do see I want to bring up to everyone is that even though it's contractual revenue, there could be some black swan event hiccup in the market that does cause AI spending to go down. And that would significantly hurt companies like CoreWeave and Nvidia. And particularly with a lot of the contracts coming from companies like OpenAI, who is not
Mhm.
profitable yet, soon to be the number one private company out there. But they are committing tens of billions of dollars at these deals. I mean, the last one they just signed was a $300 billion deal with Oracle. I can't remember how many
It's
years
crazy.
that's over, and those numbers are just mind-boggling. So if things keep going on track, I mean, it actually will only increase the AI spending, and those numbers will look small in 10 years. It'll get that wild. And I'm super bullish, so I'm on the side that AI is going to keep crushing it, and we're going to keep building, and the world is going to be so different in 5, 10 years. It's going to be hard to even understand. And I hope everyone has some money in some of these AI stocks that we're talking about. I am still extremely bullish on Nvidia, CoreWeave, Meta, companies like that. Just want to throw it out there as a little caveat to be thinking about. Always do your own research, but things are trending in this insane direction. So if things keep holding or increasing, it's going to be a wild AI ride. There's so many different places to put your money in AI that sometimes it's hard to know. And there's so many companies that are unprofitable and stuff like that, or haven't made money yet. I mean, Oklo, for example.
Yeah.
I love Oklo, but Oklo's pre-revenue, and now they're at a $20 billion value. And in the past, it's hard to get to a mega $1 billion value. They literally have zero revenue, but the future revenue could be in the trillions with the T. And that is why it's valued where it is.
Could be. I
It
could
could
also be
be.
8'5". Like there's a reality out there where I was born taller. No, but that's all good. I think a lot of these, and all of us really, like everything we own, genuinely is tied to what happens in the world with all these conflicts. I think there's so much that could change, just like a switch.
One
If it's
bomb
not
overnight.
that,
No.
it's over. Yeah, I mean, Poland's seeing drones and has shot down Russian vehicle and aircraft, and they are calling Article 4, which
Russia's
is,
testing the water here.
well, they're calling Article 4, which is the precursor to Article 5, which is what pulls all of us in.
I don't know what that means.
Art, art,
Can you please teach us?
yeah, Article 4 is so basically when you sign the National or North Atlantic Trade
The
Organization,
NATO.
NATO, or Treaty Organization, apologies, NATO, you have to subscribe to their commandments or their Bill of Rights, their Constitution, their mandates, whatever word you want. And they are prescribed as articles, okay? Article
Okay.
4 is just like an amendment in the Bill of Rights. It's just an article, it's like a stated fact in this agreement they all signed. They all agreed that at any point, if they being any country in NATO, is in an external conflict with a non NATO member of the free world, they can invoke Article 4, which is a meeting. They call every country to be present, and then they vote or discuss implementing Article 5. It's not guaranteed that Article 5 will be invoked, but Article 5 is we are all
War.
at war together, essentially. And Poland called for Article 4 on television yesterday after Russia has flown more than 500 drones meant to do damage into
Wow.
Poland airspace and has moved rockets to the Polish and Russian border on the highway system. So Polish people cannot drive to Russia without seeing missiles. So it's
It's
escalating
pretty intense.
fast. That has nothing to do with Iran and Israel, with China and Taiwan, with Pakistan and India, with Thailand and
China and
Cambodia,
U.S.
with Venezuela and America, with America and China. We're up to 7 regional conflicts, up from 1 just 2 years ago. So we are accelerating, and I think the chances that it doesn't escalate to the ultimate situation is very it's getting lower by the months. So I just think we all got to be mindful
I mean, we're
of
all going to
that.
lose if we're in some mega world war, but those countries have so much to lose. I mean, the reason that U.S. and China doesn't go to war is because we're both the biggest world powers, the biggest economies, and we'll both trash each other if we were. And I thought Russia by now would have had enough sanctions and stuff, but I know they're still selling oil to India and China and
Yeah.
whatever else. Um, but man, it's crazy. Yeah, those are the black swan events that could quickly change a market. However, I do think if there was some major market hit, if I had cash, I would buy because
A
man,
hundred percent.
we
Yeah.
keep seeing V curves on this stuff. Market goes down
Yeah.
20% in a day, it's probably back up 8% the next week. Something like that.
And that's why we stay bullish, y'all. That's why we stay bullish because God forbid something like that happened. Those are the times where we can take those opportunities and make some life-changing
But we don't
decisions.
always have cash in the sidelines like you do at your hedge fund because personal investors like me are mostly all in.
Right. I don't mind a little 5% a year and like you can inflate my money away because I'll make like I've averaged over 100% personally in crypto every year for the past 3 years. So like I'll beat your inflation for the 2 years I was
Sure,
waiting in 6 months,
doesn't matter.
Like I'm not worried about it, you know. I know what to buy.
Well, hopefully I can
When
start
you
making
buy is
some
super
returns
important.
like that. Mine aren't quite as crazy, but I am doing more trading now. Robinhood is the best trading platform in my opinion, and I've talked about it here a lot. It hit new all-time highs yesterday and today. It is
It's huge.
crushing it.
It's huge,
There
dude.
are multiple reasons it's up a
Robinhood,
lot. Number one,
yeah.
it's just crushing it. Best platform. I mean, the last earnings report, they said crypto revenue is up 100% year over year. So that's soaring. The reason it's up a ton in the last couple of days, in my opinion, is related to the prediction markets. And particularly with the NFL season starting off, the amount of contracts being traded on the prediction market is in the billions. The last couple
That's awesome.
years only got to 2 billion. Then the last quarter alone, 2 billion. 4 billion total contracts. The executive team is super hyped about it, and now so is everyone else. It's so easy to trade. It's such an interesting niche, and Robinhood just frankly makes it so easy. So do morning trading on there. I just got marked as a day trader today, so I guess I'm a day trader from now on.
Let's go. Put it in your LinkedIn pile.
It's nuts. I'm trading this Wolf Speed stock, and random note. I'm not recommending you go buy this today. Dude, Wolf Speed was up 1,700% yesterday. It came out of a Chapter 11 bankruptcy. It changed its float from, it dropped like 80% of its float. It's trading like a whole new company. It's like wild just to even read and look at it. I had to buy some just to like get in on the action because it was so exciting when I was reading about it and learning about the company.
Yeah.
So a lot of fun. It's up 50% again today. So much opportunity out there.
There is. When we talk again, we got to go into prediction markets because that's all blockchain enabled. That'll be our next topic.
Ooh, I love that.
For sure.
And we also are going to talk about why it'd be awesome to go back to, or not go back to, but change to more of a biannual reporting for stocks and let these CEOs and companies focus on actually real results and not the quarterly stock results. I think that's going to be huge. I know as a private company owner, I would not want to have to report my earnings every quarter and have a terrible quarter. So not that they're fudging the numbers, but you're moving things around, and it'd be much better if there was just a smoother, longer-term path. Elon Musk has talked about this a bunch. Trump talked about it, and I think it might be something that's happening in the future. But it's all up to some other SEC regulators. So we'll see who's over there that can make some big decisions. Hopefully help out everyone. And very exciting times. So stay alert. This market is going up very fast. A lot of opportunity. So stay tuned for more bullish ideas. Thanks for tuning in for another episode of Bullish and Beyond. Cheers, everyone.
See everybody.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps, and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.